Have you ever wondered about retail investing? Is it bad, good, or ugly? Well, perhaps maybe it's time to revisit specialized retail investing because let's face it, there's still money to be had. So listen in today on Money Match. Hey, welcome back to Money Match. I'm Ian Ardill. Today, I'm joined together with Chris Wood with Revesco Properties Trust. And he is the founding partner and trustee with them. And Chris, so great to have you here with us.
Great to be with you. And thanks so much for having me. Really appreciate it.
So Chris, I'm wondering if you can, for those of us who don't know Revesco, because ultimately you're a brand new relationship to us, tell us a little bit about Revesco. Who are you? What are you all about?
Revesco Properties Trust is an open-ended mutual fund trust based in Canada that invests in U.S. open-air retail shopping centers. So think grocery, drugstore anchored shopping centers, power centers with folks like TJX, Ross Dress for Less, Michael's, PetSmart, and the like. That's our space.
Interesting. So Chris, it's interesting. I've struggled kind of getting my head around this type of investment because for a long time, I've always said industrial and multi-res real estate. I love real estate. The clients that we work with love real estate, but again, industrial and multi-res. And oftentimes we've shied away from office real estate and shied away from retail. But you guys have a very unique edge when it comes to retail. And I'm wondering if you can tell me a little bit about the Revesco story. Tell me a little bit about your background and why you guys have really done a fantastic job of cutting your teeth in the retail space.
Well, that's the easy story to tell because it's my story, Ian. So I've been in this space since I got out of university, and that was in the early 90s. So my two principal partners in this business, Reese Duggan and Scott Lee, and I have been friends since university. And being in this space, we've worked with retailers across the Canadian landscape in a prior business, bringing folks like Target, Nordstrom, Apple, TJX to Canada. And we started Revesco a dozen years ago to take advantage of those relationships and that knowledge of this space to marry up investor money with ours and buy open air shopping centers. So grocery anchored shopping centers, power centers, and things that we could actually buy right and add value to. So in the last dozen years, Revesco's done about 600 million in transactions, and proud to say we've had a average return of over 20% in that time period. So that's kind of the elevator pitch. We really believe that this sector has been overlooked. As you said, all the money's been kind of flowing towards industrial, multifamily. And what does that mean? We think it's a great time to invest in this space because retail is not going anywhere. During the pandemic, only 16% of total U.S. retail sales were done online. That number today is roughly 13%.
Wow! So you're telling me when everybody was shopping online, that everybody really represents a significant market share, but really only 13% today in the U.S.
Correct. And so everybody's still going to the store. They're going for groceries. They're seeing their pharmacist. They're trying on their clothes. They're buying towels for the bathroom or furniture for the house. They're going to the store. And they might be buying online, but they're picking up in store. They're picking up curbside. Or if they're buying online, a lot of them are returning it in store. What's the common denominator? The store. The store's never been more important.
Wow. So I think one of the things that is hugely unique about what you're doing is you've identified a space in real estate that is kind of undervalued. And so it's the old adage of buy low, sell high, super easy to say and extremely difficult to actually deliver on. And what I hear you saying is you found a niche where that's actually truth. Now, I'm wondering if you can qualify this a little bit, Chris. because I think what makes you guys unique is that you don't just, go for the lowest price of real estate. I think you're extremely strategic in terms of what markets you deploy in. I'm wondering if you can tell me a little bit about that.
Absolutely. We are very strategic as a firm. We don't do anything without a strategy. So our strategy around acquisitions is everything has to be in a growing market, both in terms of population and income, and it has to be a direct flight away from our home base in Denver. So we have a team of 20 in our purpose-built own office building in Denver, because you have to be an active manager in this space. You have to know how your tenants are doing. Do they want to be bigger? Do they want to be smaller? Which means from Denver, I can be to any one of the markets we're in next day. You want to tour a vacancy? No problem. What time do you want to meet tomorrow? So we're very strategic about where we acquire properties.
And I think one of the things that I find so impressive is you and your two primary partners pretty much have, outside of your primary residence, all of your investable assets in this strategy. Is that a fair statement?
Yeah, I mean, a significant chunk of our net worth is in this venture. We have committed to 10% of every equity raise up to 5 million US. Once again, I should mention, Ian, everything that we do in Revesco Properties Trust is in US dollars. We take in US dollars, we pay out in US dollars, our NAV is set in US dollars. So we believe that that's a very unique opportunity for Canadian investors to get some US dollar exposure.
The other thing that I think is interesting is, like, as a Canadian citizen, if I'm not paying US tax, I can invest in Revesco and not experience taxation. And if I was to invest in either unregistered dollars or corporate dollars, it's taxed very accretively. I'm wondering, can you talk to me about that tax structure?
Sure. So the average Canadian investor will invest in units in a Canadian mutual fund trust. That mutual fund trust flows funds to a US private REIT, which acquires the assets. So when the investor gets its distribution, the lion's share of that distribution is actually a return of capital, which is a tax preferential treatment. But there's no requirement for a Canadian resident to file a US tax return and open themselves up and their estate to US tax filings.
Awesome. The other thing that I think is really interesting is that this is not just open for open dollars, although that's certainly the preferential tax treatment, but one could invest in their RSP or TFSA or any other registration for that matter in Revesco in the US dollar format by simply converting that inside their trust account. So, I mean, ultimately, there's still a great place to have Revesco in their ecosystem. So I'm wondering, Chris, if I was an investor today, you talked a little bit about past performance from your limited partnership. How has the performance been over the last number of years? You're inviting retail investors to come and participate with you. If you're looking at future performance, what do you kind of anticipate, and what does that anticipation look like, even with raising interest rates and potential headwinds ahead of us? What do you think is reasonable? Obviously this is no GIC, but what are you guys kind of predicting in terms of an investment returns?
Yeah, so if we talk about the investment parameters of Revesco Properties Trust, right now we're making a distribution on an annual basis of 4.75% to 6%. We're funding that through the operating cash flow at the asset level. So we see that as a very safe, secure distribution. Our target return is 10 to 14%. I always get asked, well, how do you get there? Sort of like your house, we're paying down the mortgage. I've got 30 plus years of leasing experience. So we're leasing vacant space. We're restructuring existing lease deals. And where possible, we're adding development density. So getting to that 10 to 14% return on an annual basis in between distribution and an increase in unit value is something that we would say we will be able to do, right? That's what we're striving to do, 10 to 14% a year.
Thanks, Chris. Yeah, I certainly appreciate your team. I certainly appreciate all the time that you and your partners have spent with me as we've kind of dived into what Revesco is all about. I think the last thing I just want to highlight from my end is that a lot of new funds that come to market, or newer funds for investors, have a bit of a J curve. And a J curve, for those that are listening that don't know what that is, it's when you have a new structure, oftentimes there's expenses that are carried in order to set up the fund that ultimately have a bit of a drag effect for the first number of years. Can you just explain that for me?
Well, a couple things. One, our money is right beside every investor's, and to make sure that we limit that J curve, we've limited amount that we're actually paying ourselves until we get this thing to critical size. So if you look through ROM, you'll see a giant donut beside what I'm getting paid. The other is just keeping control on expenses, right? We need to do that. It is expensive to start this thing, but I think those are all things that we see in the background. Really, what's limited the J curve is we've been able to buy right and add value. And that has largely absorbs the lion's share of our setup cost to date. And that's why we're hoping that we can continue the upward trend on unit value.
So I'll end with this question. Why Revesco? Why should I trust you with my money? Why Revesco?
Because this is an opportunity to get into an overlooked asset class at a really low basis. And you're investing in me and my team. We've got 100 years of experience in this space, and our money's right beside yours. So those are the two big why Revescos.
Thank you so much, Chris. So appreciate your time today. And if you have questions, know that my door is always open to you. Thanks for joining us on today's episode of Money Match.